If you are tired of having low interest accounts or even zero interest savings account, and you are looking for ways to grow your money, to grow your wealth, and to get access to credit, then this video is for you. This video will explore things that you need to know before you start saving in a SACCO. SACCO have been a very important parastatals in our country to help us access low interest loans, to help us save, and also to gain dividends from our savings and our share capital. So stay in this video to watch, and you'll get to know the facts about a SACCO, or fact about SACCO that almost took me out this year. It just came to me as a shock, because I did know these elements in a SACCO, but now that I'm in a SACCO and I've experienced it, it came out as a shock. That's why I'm doing this video, so that you may know before you start saving in a SACCO. The first benefit, or the first thing that you need to know about a SACCO, is the saving interest is usually higher than your normal interest from your bank accounts. And interest, they range from 9% all the way to 20% interest, and each SACCO has their own interest rate, and the interest in your savings or in your normal deposits, it is different from your shares capital interest. If this year you are earning 9% interest on your deposit, you are more likely to earn around 12% interest on your share capital. This is just an hypothetical example. There are SACCOs that have interest up to 20% on the share capital, and there are SACCOs which have up to 14 or even 16% on your deposits. And in relation to savings and interest, SACCO give us loans at a lower interest rate as compared to loans in bank. SACCOs will give you loans at a reducing balance interest percentage. This means, and most of them, they are 1% reducing balance. So for instance, if you take a loan for 50,000 shillings and it's at 1% reducing balance, and this month you pay, let's say 10,000, you remain with 40,000, then the interest will also reduce. It means that the following month will pay an interest of 1% of the 40,000 shillings. So the more you pay, the less the interest becomes, and the more easier for you it becomes to pay your loan, as compared to banks where they have a fixed rate, where if it is, let's say it's 12% per annum, it's fixed. Whether you pay your loan quickly or you pay your loan according to the time they have given you, you will pay the same amount of interest. All I'm saying is, to break it down, is if it is 100,000 that you have taken and the interest is 12% per annum, it means you are paying 1,200 shillings every month interest for that loan. So even if you pay 10,000, remaining 40,000, the interest is fixed. You'll still pay the 1,200 interest for that the following month, like that, until you finish your loan according to the time that they had given you. It's good you take a loan from a SACCO as compared to taking a loan from a bank. The second thing that you need to know about SACCO is the purpose of joining a SACCO. The main purpose of joining a SACCO is to take a loan at a low interest. That's where you will save, like for instance, most of the SACCO at least give you 3 times or more of your savings. So if you have 200 shillings saved in your SACCO, then you can access a loan to up to 3 times, which is 600,000 shillings. And it depends with the SACCO that you are in. There are those who give 4 times or 5, but for the purpose of this video, I'm just going to stick to 3 times, because most of the SACCOs can give you 3 times of your saving. So if you want to join a SACCO, you need to ask yourself if there are loans that you will need to take in 1 year's times or 2 years times, or in 2 years time. So before you join any SACCO, it's important for you to understand the main goal, why even the SACCO SACCOs exist. It's to give you a loan at a low interest rate. In this point, you need to understand that for you to get a loan in any SACCO, you must have guarantors. So before you join that SACCO that you have seen trending or giving out high interest rates in today, ask yourself if there is anyone in that SACCO that you know that can guarantee you when you need a loan. Because if you don't have a guarantor, you will have to take a loan that is equivalent to your savings. So if you have 200,000 shillings in your savings and you want a 400,000 loan, you will need to find someone to guarantee you that extra 200,000 shillings. And this is where most people do not understand. It's not just about joining a SACCO. You need to join a SACCO that you have people that you know. It could be your friends, it could be your workmates, it could be relatives. Yeah, it could be anyone, but make sure that the SACCO you join, there is someone who's also actively saving in that account or in that SACCO, so that when it comes to a point where you want to take a loan, they can guarantee you. Another thing that you need to know under loans is every SACCO has a processing loan fee and it has a loan insurance fee. Anytime you apply for a loan, you need to inquire about these fees so that you can know how much loan you need to apply that will be able to cover those fees without affecting the amount that you want. For instance, if you want to buy something worth 400,000 shillings, you want to apply for a loan, then it's advisable you apply with a markup higher than 400, so that when they take their transaction, the loan processing fee and loan insurance fee, you remain with your amount. If you are not aware about these things, it may shock you, because when you apply for 400,000, then you are more likely not to get the exact 400, because they will deduct those fees and loan insurance fees. And what is the loan insurance? Loan insurance fee is needed by SACCO so that in the event that someone passes away, the insurance company can be able to pay that loan on your behalf. Another thing that you need to know about SACCOs is you need guarantors for you to successfully apply a loan. And one thing you need to know about guarantors is when you guarantee someone and they do not pay the amount that you have guaranteed them. Let's say you have guaranteed someone 100,000 shillings and they have defaulted their loan. The SACCO has tried to reach out to that person and they are not able to reach them. Then you, the person who had guaranteed them, you will pay for it. So either you start making payments, scheduled payments towards raising that 100,000, or they deduct that 100,000 from your savings. This is an important fact that you need to know, so that when you start guaranteeing someone, you need to be sure that that someone that you are guaranteeing will pay that loan. They will not default, because when they default, then they will recover that money from your savings, or you will have to pay them from your hard-earned money. The third thing is you need to know is choosing the right SACCO. And the first thing, or the bare minimum, is a SACCO that is registered under SASRA. SASRA is the organization that regulates SACCO in our country. So if you're in a different country, then you need to find out that body that regulates the SACCOs in your country. And after knowing the SACCO that you want, the next thing you need to ask yourself is, how many people do you know that are in that SACCO? The reason is because when it comes to you applying for a loan, you will need a guarantor. And there is no one in their right mind that they will guarantee someone they do not know. Because remember, when you guarantee someone and they default, then it's you to pay for the amount that you have guaranteed someone. The other thing that you need to find out about that SACCO is what interest rate do they offer for the loans, of which majority of the SACCO is usually 1% or 1.something% on reducing balance. So, but you need to know these things, because the main goal for joining a SACCO is to take credit. If you do not want to take credit, SACCO may not be the best option for you. And the last thing that you need to know about the SACCO that you have chosen is the self-guaranteed loans. So if you want to take a loan and you do not want any guarantor, then you can guarantee yourself with the savings that you have. But you can only take a loan equivalent or less than what you have. If you have 200,000 shillings, you can only take a loan that is self-guaranteed of a maximum of 200,000 shillings. You can take 50,000, you can take 100,000, you can take 190, up to 200. Any amount above 200, it will need you to get a guarantor. The fourth thing that you need to know about is dividends and benefits. Dividends and benefits, or rather dividends, are issued by every SACCO annually. Every year SACCO, they have their AGM and they determine the percentage that they are going to give you as part of someone who has been saving in that SACCO, depending on how the financial year has been or how it has performed. Most SACCOs give more than 10% dividends or interest on share capital, and this is a very good amount depending on how much you want to save in your share capital. All SACCO give more dividends on share capital than the savings. And here is what almost took me out this year about dividends on savings: is dividends on savings are issued on pro rata basis. So let me give you an example. Let's say the entire year you have managed, from January to December, you have managed to save 200,000, and the following year is when they are giving dividends of the previous year. So let me just use, in 2024 you have been able to save 200,000 shillings, and in 2025 when you are about to get your dividends, you might think when they declare the dividends rate, which is, let's say for instance is 10%, you would think that you will get 10% of the 200,000 shillings. Then you are wrong. They give interest on pro rata basis. So in 2024, what you have saved in 2024, they give it in pro rata basis, which means they took a percentage of your savings to invest, and that percentage is what you will get interest on. That's what they do every year. For you to get the interest for 2024, which you had saved 200,000, for the 100% of that savings is if that amount stays there, and in 2026 is what now the 200 will get the full dividend rate of 2025, and then whatever you have saved in 2025, you'll get interest on pro rata basis. It is beneficial for the SACCO so that you do not just inject a lot of money. Maybe December you are like, okay, they are going to give me 14% or 10% in January, so let me put 300,000 in December so that I can get that interest together with what I had saved in January. And when you do your calculation, it's a lot of money, so like, I'll get that interest and then I ask for withdrawal for that money. If that is what you are thinking, then you are wrong. You will not get interest for the entire amount. You will just get a percentage of that. So if they had used 10% to invest, then you will get 10%. So 10% of what you had invested in the whole year is what you will get. But when that amount stays in that account or in the savings for 2026, no interest that we'll get in 2026 is now full amount for whatever you had saved up to 2024, and then whatever you had saved 2025, you get it on a pro rata basis. And another thing that you need to know about when you want to apply for a loan in a SACCO and you are like, okay, I have 200,000 savings and I want 1 million loan. So you figure out maybe you want this loan in a 1 week's time or in a 1 month times, and you are like, okay, let me take 300,000 that you had saved somewhere and put it in the SACCO and then apply for a loan of 1 million, because when you add 300 then you have 500, which means times 2 it's 1 million. Then you are wrong, because the SACCO will not use the entire of your 300,000 shillings that you have just deposited to calculate your loan. They will just take a percentage. Maybe they will just tell you, we'll use 50,000 shillings from what you have deposited and what was in your SACCO to calculate the loan that you qualify for. So these are the nitty-gritties of SACCOs that you need to understand before you jump into a SACCO and you say, oh, I can get 3 times, so let me sign up to a SACCO, put 500,000 shillings and then apply for a loan. No, it does not work that way. All SACCOs, they give you a minimum time of you being an active member. Like for instance, 6 months, you need to have saved actively for 6 months in a SACCO so that you can qualify to take a loan. So if you start saving this month, in the next 6 months you cannot apply for a loan. So do not just take your money that you had saved maybe in an emergency fund account, which is MMF, and you're like, oh, I've gotten an emergency or I need to buy a car and it's urgent, and you take your 500,000 from your MMF to SACCO and then you want to apply loan for that month, then you are wrong. You'll not be able to apply. You sign in, then you continuously save for like 6 months, then you'll be able to qualify to apply for a loan after 6 months. The fifth thing that you need to know about is share capital. Every SACCO has a minimum amount of share capital that you need to have so that you can be able to apply for loans in that SACCO. And it varies. It could be 5,000, it could be 2,000, it could be 10,000, it could be 40,000, it could be 35,000. It depends on the SACCO that you are in. So before you join a SACCO, you need to ask yourself, what is the share capital that you need to have before you can access a loan? This is important because you can just register and start saving, and maybe your share capital is 2,000 and you have saved, you have stayed for 6 months continuously and actively saving. You have your 100,000 in savings, and then now you want to take a loan, and when you go and apply for a loan, you get hit with that bumper that you must reach maybe 20,000 capital share or an X amount capital share amount for you to be able to access a loan. And most people, when they do not understand the nitty-gritties of SACCOs, they tend to think SACCOs are a scam, they're trying to take money from you. But no, every house has their rules, and that's why I'm making this video, to let you know the nitty-gritties of SACCO that you need to check before you decide which SACCO you want. And another thing that you need to know about SACCO, about share capital, is you cannot withdraw your share capital. All you can do is transfer the share capital to an existing member of the SACCO. Underline the word existing member of the SACCO. So if you are tired or you want to exit a SACCO, then you need to look for someone in the SACCO to buy those shares so that they can give you cash. You may think, oh, that's a good thing because I will not lose my money. But the truth of the matter is, if your share capital is 10,000, the best offer that you can get is probably 8,000. Someone who is willing to buy your 10,000 shares at 8,000. This means that if you have 10,000 shares capital, you are more likely to sell them at a lower amount than the actual amount to be able to transfer them to a member. And another thing is the interest rate for share capital is usually higher than savings interest. I think the reason because this amount you cannot withdraw it, so it gives the SACCO the confidence to invest in high returning investments, because they know there is no day you can wake up and say, I want my savings, my share capital back, because it's non-refundable. But for savings, you can apply for withdrawal and get back your money. So that means the SACCO invests maybe in short-term investments that can give low interest as compared to share capital, where they can invest in long-term investments and still get high interest. The sixth thing that you need to know is the long-term benefits of you being a SACCO member. So the long-term benefit is you being able to raise significant amount of money that can give you a good dividends amount every year. Maybe your goal is to have 500,000 in the SACCO, so you can save it in a stretched period of time, and then you'll be able to enjoy the interest of having 500,000 shillings in the SACCO. And another long-term benefit is you are able to access credit from that SACCO, which is the main reason as to why people join SACCOs. Saving in a SACCO becomes a key financial resource for you when you want to do developments like buying land, buying a house, or even taking children to school. There are people who take school fee loans. Since they are at a low interest, then it becomes manageable for you. The seventh and most important, not really most, one of the important things that you need to know about a SACCO before you join is withdrawal and the exit terms. Everything you join, you must know how to exit. And most of the people, when they are joining SACCO, they're usually like, I just want to join SACCO this year. It's in my goal. I want to save a significant amount of money by the end of the year. But you forget to ask about exit, because at that time you're not joining SACCO thinking you will exit. But trust me, life challenges will come, and change of thoughts and change of passion will change as time goes by, and you might be like, I actually want to exit this SACCO and join another one, you see, or I want to exit this SACCO for good. I am tired, I just want my money and I spend it, or I start a business without taking a loan. So most of the SACCOs will ask you, when you apply to withdraw or to exit a SACCO, they will tell you to take a loan equivalent to your savings amount. That is one way. Other SACCOs, they will actually allow you to withdraw the amount of money that you have saved with them, and you have to apply and give them 30 days or 60 days notice for you to withdraw that amount. Another scenario is most of the SACCOs will not allow you to withdraw a portion. Like, for instance, you have an issue that you want to sort with money, you don't have a job, or rather you don't have an income, or the income that you have, you don't want to strain it to pay for that loan. So you have 500,000 shillings in a SACCO and you want 200,000 shillings. So there are SACCOs that do not allow you to withdraw that amount. They will just tell you, if you want to withdraw, you have to exit. So that means maybe they give you that option of taking a loan against your savings, or you just withdraw and now you start figuring out who you are going to sell for your share capital. If you are not able to get someone to sell for those share capital, then it means you lose your share capital. You cannot withdraw money from a SACCO or exit if you have guaranteed someone and they have not yet paid the amount that you had guaranteed them. For instance, if you have 500,000 and you had guaranteed someone 200,000 shillings, so that means the money that you have not guaranteed anyone is 300,000 shillings, and you don't have a loan and you want to exit. So the SACCO will tell you, if you have to exit, then it means you'll have 300,000 that you can work with, and not the 200,000 that you had guaranteed someone. So you see, that is a very sticky situation. And so this information will help you to plan. So if you guarantee someone, then in your mind you need to know that there is no time any soon that I might want to exit the SACCO or want to make a withdrawal. The most you can do is take a loan against your savings, or maybe take an extra loan and get guarantors. The reason why you need to understand this nitty-gritties, when you're joining the SACCO, like I say, you may think that these exit and withdrawal terms are not important, but trust me, they are very important. So call those SACCO officials and understand to the details what it takes for you when you want to exit a SACCO. If they allow you to withdraw, or also ask if they also allow you to withdraw part of your savings and still continue being a member, because life comes with a lot of surprises. Finally, always do your due diligence. Check whether that SACCO has listed or is being regulated by SASRA. Check whether members get dividends on their savings or on their share capital. Check the amount of share capital that you need to have to be able to access a loan. Check the duration that you need to have actively saved so that you can be able to take a loan. Ask questions. Call those SACCO officials and ask the questions that I've listed in this video. Do your research. Know ins and outs of a SACCO before you join. This will help you to manage any surprise that may come about while you are in your journey of being a SACCO member. Thank you so much for watching this video. Please feel free to share this video with anyone who needs to learn or know about SACCO savings before they join, or even someone who had already started saving in a SACCO and they had not learned about the details of what happens in a SACCO, and it will help them increase their confidence in saving and in building their share capital, and help also you to plan when you want to exit a SACCO. You need to plan early in advance and know, I will exit in 6 months time, so during this time I will not guarantee someone, and then you'll have an easy life with your SACCO.